Today, we're diving deep into the world of foreign exchange, specifically looking at a fascinating development between the Japanese yen and the US dollar. If you're interested in global finance or just curious about how currencies move, you'll want to stick around for this. So, what's the big story? The Japanese yen has been showing some serious muscle, holding its ground near a one-week high against a broadly weaker US dollar. For those of you tracking the USD-JPY pair, you know it's been a roller coaster. But recently, the yen has been on the front foot. This strength comes despite the fact that the Bank of Japan just ended its 8-tier era of negative interest rates. You'd think that would shake things up differently, right? But here's the twist. Even with that historic policy shift, the Bank of Japan has signaled that it's going to take a gentle, cautious approach to any future rate hikes. They're not slamming on the brakes, they're just easing off the gas. This dovish stance is keeping a lid on any explosive gains for the yen. It's a classic case of market expectation versus reality. The rate hike happened, but the promise of slow and steady future moves is what traders are really paying attention to. Meanwhile, over in the US, the Federal Reserve has also been in the spotlight. After their recent policy meeting, the Fed stuck to its projection of 3 interest rate cuts this year. This has put some downward pressure on the US dollar across the board, which, in turn, gives a currency like the yen a bit more room to shine. It's like a seesaw. As one side goes down, the other goes up. The weaker dollar is helping to lift the yen. So, what's the magic number to watch? All eyes are on the 151.00 level for the USD-JPY pair. This level is becoming a key psychological and technical barrier. Why? Because traders are on high alert for any potential intervention from Japanese authorities. If the yen weakens past this point too quickly, there's a growing fear that the government might step in to support their currency, just as they've done in the past. This threat of intervention is acting as a strong ceiling, preventing the dollar from climbing too high against the yen. In a nutshell, we have a fascinating tug-of-war. The Bank of Japan's cautious stance is capping the yen's strength, while the Fed's rate cut projections and the threat of Japanese intervention are supporting it. The 151.00 level is the current battleground, and a decisive break above it could signal the next major move. We'll be watching closely to see which force wins out. That's our update for today. I hope this breakdown helps you make sense of the action in the currency markets. If you found this useful, please hit that like button and don't forget to subscribe for more financial insights. Thanks for watching, and I'll see you in the next video.